All right. Hey, everyone. Mark here. Thank you for joining me for another GreenBridge Investing market analysis. This is a live stream. So for those of you that are new, please make sure to share the symbol or the market that you'd like to see in the chat. So once I conclude my portion of the analysis, I can get to what you want to see. And I do want to spend more time on the charts that you're interested in, obviously. So let's get started. All right, so this is for educational purposes only. For investment advice, please consult a licensed investment advisor. Also, if you're new to the channel, please make sure to press the like button so that you get an email notification from YouTube every time we stream, whether it's Talking Markets or my stream here. And also register for the, I meant register for the channel, and press the like button if you like the video that I'm doing. I really appreciate the feedback. All right. Also, more about GreenBridge Investing. If you're new to it, I put all the information about what we do and everything in the links in the descriptive portion of this stream, on the bottom there. So click on Show More, and all the information is there. So I don't have to spend 3 minutes talking about an ad. All right, now let's get to it. Okay, so first thing I want to talk about is the Bitcoin situation. And here's what we have going on here. And by the way, if you can't hear me, just let me know, because I'd like just to see if people are listening. If you can just give me a hello in the chat, so I know that this thing's working. All right, so let's talk about Bitcoin first. Now, so I'm going to talk about Bitcoin, then I'm going to talk about a couple of alts, and then we're going to take a look at the stock market real quick, and then, of course, gold. All right, and then from there, I want to answer all of your questions and try to get through as many as I can. So the Bitcoin situation. Now, first of all, we had a swing trade. Actually, had a couple of swing trades. The first one was way back here at that 33,650. And that was what, like a week and a half ago, whenever that was. And that trade has done very well, right? It's reached 2 targets, and it's just about to reach its 3rd target. The 3rd target is at 48,650. It's 200 points away. This stupid thing just doesn't want to go there. But the momentum's bullish right now, and it's likely to reach that target, going into the evening or over the next couple of days. So not worried about that. There's nothing to do there. Another swing trade was issued on Saturday. It was much more aggressive right around here, and that's doing well. Also, basically playing the breakout, right? We got the breakout. Now, here's the situation. Right now, there's a higher low that's developing, okay? And this little continuation pattern here, this little situation up in here, it's a trend continuation pattern, right? The momentum is bullish, the broader trend is bullish, so we're likely to get one more leg higher. What gives me even more confidence in this situation about getting that leg is if we do a count of the subwaves in this structure, and I'm referring to Elliott wave here, I can only count 4 waves, which means there's one more, okay? And that one more can take this thing above 50K. So wave 1 peaked right there, all right? And I've gone over this before. Wave 2 over here, this low. Then we have wave 3, which is this very aggressive bullish wave. Now we have a little mini wave 4, which was this little red candle, okay, or yesterday's candle, whatever. And here we are. We have a green candle. It's going for the high. That means we're in a 5 of a 5. Okay, now wave 5s, they can extend. So that gives me confidence, though, that we have at least one more leg higher. And in that leg, I should be able to count 5 mini waves, right? That's how Elliott wave works. So this is obviously wave 1 of it. So maybe we get like a little, I don't know what, like a little candle or something. Because these mini waves are going to be like a single candle little thing. And maybe they won't even show up as a single candle. They may only be visible on a smaller time frame. So I'm not going to sit there and get all crazy trying to count them. All I know is we're in a 5 of this 5th wave, and it gives us potential to go higher. So how much higher? 50K is obviously going to be an inflection point because it's a pretty important whole number. But we may even go into the mid-50s. Now at this point, I don't want to have like opinions as far as how high it can go and targets and this and that. I just want to go by the price action because that allows me to let the winner run further if that's the case. Now, we have a target, like I said, at 48,650. I'm leaving that alone. I'm not going to change that target. I want to get taken out, and we're distributing our risk. But I may issue a new swing trade idea, a very aggressive one off of this breakout here. Why? Because we have a higher low. I can define risk. The trend is bullish. We're getting a breakout, and I'm expecting another leg. Yes, it's aggressive, and it could fail, right? It can fake out and fail, but it's a setup, okay? It's a setup in a bullish trend. I can't ignore it. So that I will probably send out as an alternate trade. So whether we take it or not, you have a choice, okay? You can take the alternate trades or trades that we don't necessarily take, and we're very clear about that. So, but some people like those more aggressive trades, right? So we send out the idea with the stop loss and the targets and all that stuff. All right, that's a swing trade. Now, that's Bitcoin. So let me jump over to something like Litecoin, because look, yesterday I pointed out in the chat room that we had this pin bar situation developing up in here, and I said that was a bearish development, right? But it all depends on the close, and we didn't close bearish. It started out bearish at one point. It was looking pretty bearish, but then it turned into a doji, which is indecision, right? Not necessarily bearish. What I was concerned about was the level, the location. Now here we are with this green inside bar. Again, that's a continuation pattern to go higher. So these things, if they want to stay strong and push higher, hey, that's their business. I'm not going to buy, I wouldn't be swing trading Litecoin at these levels. I'd rather go with Bitcoin, because that's pretty much the leader. If Bitcoin fails for whatever reason, this thing is in a very vulnerable location. So I'd rather not trade Litecoin. A couple other ones real quick. Let's take a look at MXMR, right? Monero. So look at this breakout. All right, this is what your coin should be doing if you're in an altcoin, right? Bitcoin hasn't even broken out yet, and this thing is ahead. That is relative strength, right? That's outperforming. And that's the same type of breakout I'm expecting from Bitcoin, right? The little higher low, and look, it's going for it. Okay, great. Now it can still fail, but my point is this. People ask me about these altcoins. They'll say, oh, well, what about, this one? It's in a range and blah, blah, blah. With Bitcoin doing what it's doing, it should look like this chart right here. If your coin does not look like this chart, it's probably not a good idea, because what you need to keep in mind is these coins are all tied to Bitcoin still. They don't trade on their own, whereas we can find stocks that trade on their own. They don't need the S&P to do something, because some particular news can come out for a particular sector and everyone will pile into that stock, right? So that's why stocks behave differently, and that's something you need to understand. All right, so those are a couple altcoins. Again, if you have any questions about these or coins that you'd like to see, please let me know in the chat. I don't see any questions here. Oh, my chat may not be working. Let me refresh this real quick. Sometimes, YouTube likes to mess with me. Oh, look at that. Okay, see what I mean? There was nothing going on in my chat, and I'm like, All right, meanwhile, there's a bunch of questions here. Okay, so let me see. Hey, Peppy. Okay, cool. So we'll get to that. Hey, Glenn. No problem. Hey, HS. Nice to see you. Gabriel, Sean, Mario. Okay, so good. Glad to see your questions. We're going to get to them. All right, so let me move over to the stock market real quick, because we have this situation, and I want to address the UVXY trade that I sent out yesterday. I want to talk about why I sent it out real quick and what we're expecting. Very tough type of trade to take. Now, a lot of people got much better prices than me. It was an options trade, and we had this outside bar that developed, okay? And that could be an initial bearish sign. Now, there was no follow through, and it looks like today we're not anywhere near that low, so the sell signal is not exactly in effect. When the market recovered yesterday, that's when everyone started getting into that UVXY, which is fine. Counter trend trades are very, very aggressive. What I like about the UVXY is if I'm faked out and this thing just keeps going higher relentlessly for whatever reason, my risk is completely defined and limited. So I won't get stuck in hope mode. I won't get stuck in a position that's too big and get margined out and all that stuff, because I made my purchase. My risk is defined. Okay, so if I lose that's the max I can lose, and I have a choice. I can get out earlier if I don't like it and take a smaller loss, or I can be like, screw it, I'll let the market decide, and I can take a full loss. But that full loss is acceptable because I determined what that risk was in advance and I accepted it. Okay? You shouldn't be taking risks that, are unacceptable to you, or that they're going to make you react a certain way. People get caught in that all the time. They get too big too fast, and then they get caught because of an opinion or something, or someone else said to do it or whatever. They have a big position, and that big position, which can make you uncomfortable, will make you emotional. And emotional reactions are the worst possible way to act on market information, all right, because of the randomness. Now, so that's UVXY. UVXY is the ProShares VIX ETF, and it basically will go higher if the VIX spikes. In order for the VIX index, excuse me, to spike, we need a pullback in the S&P, a dramatic one. So Nasdaq and S&P move together. My point is this. We didn't really go anywhere today, right? So what, we have a less than an hour left. We have an inside bar that's developed here. So this could still turn into a sell signal. Just have to be patient. I bought March calls. By the way, those are monthly. People are asking, what the date was on those calls? Monthly. I don't buy weekly. So whenever I put out an options trade, it's always monthly. If I'm going to do something with weekly, I will be very specific about that. Okay, so March means we have what, like 6 weeks or 5 weeks. So looking for that pullback, and we don't need, one thing about UVXY is we don't need the Nasdaq to go all the way to here. We don't need that. Even if it goes halfway, those UVXY calls will probably become profitable. Okay, so that's why I put targets in the order. And you can get, if you're getting out for 2 times the risk or 3 times the risk, that's a winning trade. You take the money. That's what you have to do. If you're looking for a home run, that's where you ask for problems. You ask for trouble. This trend is not bearish. So we're taking a counter trend trade, and it may inch higher. So that's why I suggested, if you're new to options, you don't know options, paper trade it. Don't take it for real, because it can easily lose. And, why take that kind of risk if you're not comfortable with it yet? You shouldn't be trading or putting real money to risk at all if you're uncomfortable with something. All right, so that's the Nasdaq. Now, speaking of a couple of stocks real quick, I just want to show you some, because if the Nasdaq is going to continue higher, it's in a very vulnerable location, and I'm interested in non-correlated stocks, especially around these areas, because if the Nasdaq kind of stays a little bit strong and messes around, I'm only interested in stocks that may be able to do their own thing, that are driven on their own use. Look at WAFU, right? WAFU Education, nice pullback into a support area. I'm watching this as a potential swing trade. It's a cheap stock, which means it's going to pop up on day trader radars. And I like this initial push previously, just a week ago, whatever. Nice push. I mean, off of $4, went to $8 or $8.50. That's a nice little move for such a cheap stock. I don't believe I've looked for options. I don't believe there are options on this stock, but anyway, so that's one on the radar. The other one on the radar is QuantumScape, which we had a trade in it previously, which you could see here. That got stopped out. But look at this great formation, okay? I like this formation, and this is another possible swing trade idea. Again, this one is not highly correlated to the market. It has a tendency to do its own thing. That's what I like to see. This one does have options, but they might be expensive. So anyway, but these are the two that are on my swing trade radar. Remember, swing trade is not the same as investing, all right, or position trading. So it's important to understand the difference. I know most of you do, but some people are still learning that. Swing trades are very short-term oriented. Investing or position trades or carrying inventory are very long-term oriented, and you have to manage the risk differently. Very important that you understand that. Okay, that's why people run into a lot of problems. They think a trade is a trade, and it's not. Okay, so that's those two I wanted to go over. And oh yeah, FUV. This was trade of the week that we sent out, and someone had asked me in the chat room, should you get out? Yeah, it went to the stop. 29.25, okay, was the stop, and this thing is at 28.29. So look, it tried, it tapped everyone in, and it stopped out. This is going to happen, okay? It's going to happen. Now, is this stock no good anymore? No, it's still strong, right? The broader structure is still strong. It's just the pullback isn't over yet, and we took an aggressive entry on that, right? So one thing, take stop loss orders are the best things in the world, okay? No one likes to lose money, I understand, but let me tell you how much money they save. They save a lot of money, because if you get into this, right, let's say you don't take that stop loss order, and you're like, I'm going to hold it. It'll come back. Yeah, it'll come back. It's a good stock, right? What if for some reason FUV has some, whatever, maybe a negative report, or the CEO quits, or whatever, something unexpected. This stupid thing can get cut in half, okay? And you'd be like, I should have taken that stop. So always, for short-term oriented trades, if there's a stop defined, you must respect the stop. This is not a position trade. This is not an inventory trade. If it was, then sure, we'd be buying more, but small bites, right? That's how we control the risk. Anyway, this may turn into something like that if it could pull back more, but right now, you're out, leave it alone. The game is over here. Let it find a better level and reestablish a new buying opportunity, and we can get back in. So anyway, that was trade of the week. We sent that out to everyone, free members and paid members. If you want to get trade of the week, just sign up at greenbridgeinvesting.com as a free member. The week before, by the way, was SKLZ, right? Look at this nutty stock. This one was from Henry. Henry called this one on the show, and it went to all three targets, right? Target 3 was 42.50. This thing went to 46.25 in 2 days. So just to show you, I mean, that was a trade of the week also, and this blue box represents the target zone. That box was drawn in when I sent the trade out, okay, on Wednesday, and on Thursday and Friday, it went nuts because of some news, you know, they had partnership with the NFL or whatever. So, you know, the trades of the week, not all of them work out, and some of them work out really well. What makes the whole idea, the whole strategy profitable are the reward risks, right? We're always risking less than what we're looking to make on the average in these trades. So if you take all of them over time, you should come out ahead, right? Because of the expectancy, it's positive. All right, so those are a couple of stocks. I'm going to get to your stocks and all the stuff here in the chat in a moment. Again, if you have anything you'd like to see, please share it in the chat. Okay, so let's, I'm doing pretty good with time. Let's take a look at gold. All right, so I bring up gold a lot. Gold, this structure, and I keep repeating this because I really want people to comprehend it. This structure from the high over here, August high, to basically the December low and to where it is now is a broad what? In fact, I've repeated it so many times. Let's see if people know the answer. I'm going to ask you people listening in the chat, what is this structure from the August high to December low? What is that in terms of Elliott wave? What is that? Who can tell me? If you can't tell me, it's okay. You can say, I don't know. I want to see who's paying attention, or maybe this group, you know, doesn't see those stuff that I share in other places or whatever. But what structure is this in terms of Elliott wave? It's important to comprehend this. You really need to print this picture in your mind because Bitcoin is going to do something similar. Now, not exactly, but this type of corrective structure, it's a consolidation. As you can see, it's very long. It's like over 6 months, right? So I'm still waiting for my answers. Who can tell me what wave structure this is? And again, if you don't know, put I don't know. All right, so let's see. Pepe says some sort of consolidation, maybe wave 4, broad wave 4. Isaac got it. Well, and Pepe too. Yes, this is wave 4. This is what a broad wave 4 looks like. Well, it's compound. It is a compound wave, but the thing is, the entire structure from the August high to the December low it's a consolidation. And if you zoom out and you look at the bigger picture, right, gold is definitely not bearish. There's nothing bearish about this chart, but we have this consolidation. So if we actually do a wave count, I'm not going to do that right now, this turns out to be like a wave 4. All right, now I keep bringing that up because Bitcoin will do something similar. Once it completes its wave 5 of the 3 that we're in, all right, and if you're not into Elliott wave or you're not familiar with it, please don't get confused by the terminology. All you should know is wave 5 is usually near a peak and the impulse is nearing its completion, okay? What that means is you're near a top, okay? So this is what happens after a wave 5, and then you go into, you know, since the broader wave is 3, the next thing to follow is a 4, okay? And that's what we got here. So, so that's something that if Bitcoin starts to behave in a similar way, and some people may say, well, that's nonsense. How can with all the hype and everyone buying Bitcoin and all the institutions and the low float and there's no coins anywhere, how can it do something like that? Markets are irrational. So all the fundamentals, all the great news, all the positive blah, blah, blah means nothing in the eyes of the market because investors are irrational and they'll sell something for some unknown reason, okay? I mean, there's plenty of examples of that, and I'm going to bring up cannabis here in a moment. But anyway, so let's talk about gold levels. And there's a conflict here with fundamentals and technicals, right? Because fundamentally, gold should be going higher. There's a shortage of physical gold and physical silver. If you ask a gold dealer or a metals dealer, they can't find any physical. Right? And you have to pay these ridiculously high premiums for physical metals, right? So how come the paper is not following? Well, the paper is more manipulated for one, because you can make a lot more paper than you can of the metal. So institutions can get really short something like this and shake people out because there's leverage involved, and they can pick up the paper at really cheap prices, right? Especially if they're anticipating a huge move in gold. Now, so that puts us to where we are here. The way to capitalize on this, and we've had some questions. I had some questions from actually Cam in the chat room. And Cam, I hope you're watching this, about buying gold for a portfolio or long term. The way to do it is with gold mining stocks, right? So instead of buying the physical metal, which can be very tricky, not a good idea if you're not familiar with the metals business, you're better off buying mining stocks, okay? Same with the CFD. If you're not familiar with the CFD or these type of contracts, stick with the mining stocks. Now, gold will be your lead, just like Bitcoin is the lead for all the altcoins. Right now, gold has come off this range low, and we have this little pullback developing. Okay, we have a pin bar. Look at the most recent price action. I bring this up because you should be familiar with this when Bitcoin does similar things. Look at the pin bar. Okay, and now we're pulling back. Okay, beautiful. Is this thing going to make a lower low? It might, but what if it doesn't? What if it makes a higher low somewhere in this range, or a failed low? You better believe I'm going to be going long gold again. I mean, at least for a swing trade. Now, as far as position trades go, again, let's talk about gold miners. Newmont Mining. Look, Newmont Mining is doing something very similar to gold. You want to pick up gold exposure? Hey, today's a red day. If you have a specific allocation in mind, which you should, now is a nice time to pick up some Newmont Mining. Wheaton Precious Metals, WPM, another one. Look at this. It's minus $1 today. It's on sale. It's like going to the supermarket and buying tomatoes on sale, right? They're on sale. You can get them cheaper than they usually are. So that's what's going on here. This is the way to get exposure to gold. Another one, GOLD, which is Barrick Gold. Here, let me pull up Barrick Gold here. Barrick Gold Corporation. Same situation, right? They're looking ugly. The general charts look ugly, but they only look ugly in the short term, because look at the longer term. Look back a year ago. It's just a broad higher low. All right, so great time to be accumulating inventory, but you want to make sure that you have your allocation planned in advance, meaning don't sit there and say, I'm just going to buy a bunch of it. I don't know how much. No, so if you have $10,000 to invest, let's say that's your max amount, that's all you got, $10,000, you want to invest it, but you're not sure what to invest it in, but gold looks pretty good. Well, you're going to take a portion of that $10,000 and you're going to allocate that to metals or gold, maybe gold and silver or something like that, right? So how would that work? Well, so you say, okay, a decent allocation, right, maybe be like 5 to 10%. So let's say you're more conservative, 5%. What's 5% of $10,000? It's what, $500, right? Because 10% would be $1,000. We're talking about $10,000 here, right? So 5%, that means you can allocate $500 worth of your capital to metals, right? $500 doesn't sound like much, but hey, you only have $10,000 to invest. And there's a lot of other things to allocate to, right? So you don't want to have gold 30% of your portfolio. That's too much. Especially, metals should be on the smaller side. High quality stocks should be probably on the larger portion, or heavier, I should say, heavier weighted portions of your portfolio. You really need to organize your portfolio and plan everything in advance, all right? So like if you're new, a good thing to do is spend more time planning, not reacting. There's no hurry. There's no rush. You're not going to miss anything. The market will be here, okay? Unless the whole country goes out of business, there will be a stock market, and there will be plenty of opportunity. Now, you want to, one thing, I'm not going to sit here and talk about portfolio management for 3 hours, but here's one thing I want to say. It's a good idea to, depending on how aggressive or conservative you are, what I like to do is I like to split the portfolio in half, right? And keep half of the portfolio. I tend to be more conservative. So I like to keep half in liquid capital so that when a very unusual opportunity comes along, I have the money to go in with, right? So that means it stays in dollars. And some people may say, but you're losing on inflation. Yeah, right. Okay, fine. But when an opportunity comes, and I'm talking about a rare sell-off like we had a year ago back in March and April bottom, right? That's when you put that money to work, and then you will beat inflation at that point. Don't worry about beating inflation, all right? So now, 50% liquid capital. The other 50%, you're going to split that up into your different sectors. You're going to have your aggressive sector. You're going to have your option sector. You're going to have your swing trade sector. You're going to have your conservative sector of dividend paying stocks, right? And then that's how you come up with your target allocations. All right, so again, I don't want to spend a lot of time, and I could talk about that for hours and hours and hours. Like Michael has pointed out, I can talk about the weather for an hour. All right, so let me move on here before I get caught up in a rant. I want to answer your questions. So that's the whole gold situation. All right, so I think I've pretty much covered all the things I want to cover. Let's get to the chat. All right, Pepe, so Ethereum. Let's take a look at Ethereum. ETH, USD, let's see. So now, look, Ethereum has been acting pretty strong, just like we looked at Monero. In fact, I think I have a better chart here. No, I don't have it on this one. All right. Ethereum, let's look back a little bit here. This thing has been strong, right? There's been a lot of hype with all the coins that are built on Ethereum. Okay, that's nice. It's tricky though. So Bitcoin is trying to push the highs and Ethereum's going with it. That's a positive sign, but you're in such a tough spot. I mean, so here's the thing. If you're a swing trader or short-term oriented, these are not attractive levels. The risk of retrace is too high. This thing can easily pull back, to a support around 1465 or the 1450 area. Why buy the high and get stopped out of it if there's a dramatic pullback? And right now it seems that these coins are correlated to the stock market, right? And this may be an anti-inflationary situation going on with the dollar. All right, I don't want to get married to any opinions, but the point is, if there is a dramatic pullback in the stock market, like everyone's been anticipating, right? Especially since the whole world is buying UVXY, from what I understand, or copying our trades, then these things will pull back with it. That's a possibility, right? And they'll say, well, people are getting out of their coins because they have to cover their margin calls in the stock market and blah, 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 right? Whatever. And they'll tell you that after the fact. I don't know how tied they are, but the point is, I don't get confused by all that stuff. I just look at levels. This level is unattractive. Now, if you're an investor, okay, different story. Now, if you're in Ethereum and you've invested at much lower prices, these are excellent prices to distribute risk. Okay, you want to unload on the people who don't have any regard for risk, who don't understand risk. That is how markets work. All right, you buy when the risk is low and you distribute when the risk is high. And who takes it off your hands? People who don't know any better. Okay, that's just the way it is. People go on their feeling, they go on intuition. Hey, it looks right. Hey, it looks safe. Hey, I read this article on Coinbase and they said it's a good time to buy. Okay, great, whatever. Now, so my point is, as an investor, if you have some, you should unload some, but not everything, right? You unload a portion, you lock some profit in, and on the pullback, you can buy that portion back if you're long term. Some people are long term. There's nothing wrong with that. But when you have an opportunity to lock in some profits, you should take that opportunity. Okay? Just lock something in. Now, the second thing is, what if you have no Ethereum and you'd like to buy some? Well, then you can do the timed investment plan, as I'm going to call it. Okay? Because basically, you're going to throw the charts aside. Not going to worry about technical analysis, and you're just going to time it. Your investments are going to be based on a monthly or bi-monthly occurrence, right? So you're going to determine how much you want to invest, and then you're going to say, okay, I'm going to buy $100 worth because I'm going to invest $1,000 altogether, or $2,000 altogether. You're going to split that up into $100 increments, and then the first of the month and the 15th of the month, you make that purchase. Okay, no matter how high or how low it is. The thing is, you can actually control your risk a little bit more effectively by skewing the amount of the purchase. So now, since we're at these ridiculous highs, we're at a high. Instead of buying the full allotment of $100, you buy $50. Okay, so you're buying less to compensate for the risk of retrace. Pulls back dramatically, then you buy your other $50, or maybe you buy $100. Now you have $150 at an average price. Again, that's the long-term orientation. The thing is, what if there's a really big pullback? Okay, if there's a really big pullback and you've made a purchase, maybe you put more weight on that purchase. So instead of $100, you buy $200 at a really low price. Now, you're still working your way toward the full investment amount, right? Just like we talked about with the gold, same idea. So that's how you get involved in something like that. Okay, so I'll leave you with that. Okay, let me see what else we have here. Okay, Gabriel, hey, good to see you. Sean, okay. Hey, Mario. Mario, I didn't realize that. Okay, cool. I didn't realize you're a Javier trader. Glenn, okay, so BTC, I went over. Oh, BTC, ADA, ETH, XLM. So I guess you want to see each one individually. So I went over BTC. Let's take a look at ADA, USDT. Let's see. So, oh man. So this thing has just been vertical. What price is this thing now? 95 cents. Okay. Blew through all of my inflection points. In fact, there was one around 75 cents. I was talking to Romana about that the other day. I said there was one around 75 cents. I hope Romana didn't sell any, because he was like, yeah, I don't, if it goes to 57 cents, and there was no reason to sell. This thing's vertical, okay? Romana, maybe you could send me a tip or something. I'm just kidding. So at this point, there's no reason to sell. I mean, there's no sell signal. So what do? If you have some of this thing, unload some, right? Even though there's no reason to sell, lock in something, because there's a lot of people willing to take it off your hands. There's been a lot of hype about this. I've gotten phone calls and text messages about Cardano because it's going to replace Ethereum, and there's obviously a lot of hype on this thing. So I would not sit there and think you got the next Ethereum. Lock in profit while you can, but you don't have to unload your whole position. So if you're not in it, don't chase it. This is the worst place to buy it, okay? Wait for a pullback. I have to do some research on the levels, but I would expect around that 75-cent area now to act as a support. And, so I'd wait for something like that before getting involved in this if you're not involved yet. Because, again, you're just asking for trouble. You're buying the top. But, wow, what a nice chart. That's great to see when you're in it. Okay, so I went over Ethereum, XLM, so Stellar Lumens. Oh, wow. 46 cents. Okay, nice. This thing has been a real slow mover to make progress. So here's the thing with this. Again, if you're in it, you should be taking profit. Okay, like I said, same thing. Whenever you have something go vertical, lock something in. Whenever it goes vertical, lock something in. Write that on a piece of paper. There's no reason to sell right now. There's no sell signal. All you have is a vulnerable location. Right, the previous high on this thing was 43 cents. This thing is now at 46 cents. So it's in a failed high area. It can fail here, but obviously you're going to need the whole market to fail, right? Bitcoin's going to have to fail, and then you'll see this thing pull back. So why not take something off while you can? If you're not in it, don't chase it. This is, I'm not a big fan of breakout trades, especially when they look like this. What's the difference between this and the breakout trades that I like? Well, the problem with this is there's no nearby support. Okay, the breakout trades that I like usually have a little mini high or low nearby. Like let's say it pulled back here, and then it looks like, okay, you know what, it may go for another leg higher. But this has just been vertical, and you're in a vulnerable location on top of that. So I would just not chase this thing. Wait for a pullback, okay? If you're in it, lock in some. If you're not in it, step aside. It'll pull back, okay? These, and by the way, I don't really encourage investing in these because I believe a lot of these are just flavor of the week type of situation. When the party's over, most of these worthless coins are going to go back to probably being worthless, right? Now, let me just tell you a little story. 20 years ago, the dot-coms, many of you may have not been trading at that time. The dot-coms, again, they were going to fulfill the promises of the internet and blah, 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 and there's going to be all this opportunity. And guess what? Most of them, you don't even know who they are anymore. Okay, there's a handful of them left, but many of them are no longer on the stock. They're listed on the stock exchanges. So these coins will probably go the same way, right? So that's why, unless you have like a really, really, really good price, this is really not the time to invest in them. They need to be hated, all right? And that's the time. If you want to invest in anything, that's the time when you'll get the best prices and the lowest risk, when they're hated. This thing's not hated right now. It was hated, back in, a few months ago, but not anymore. So that's that one. Let's see. Yeah, so XRP. Okay, HS, let's see. XRP, USD. Let's see, against Tether. So look, XRP has been trying to work its way back, right? It had that negative news, back here or whatever, and look, it's been trying, but I don't like, look, Bitcoin, Ethereum, right? Even Litecoin, they're all going for their highs. They're all trying to push their highs. Now this thing is trying, but it still has yet to be up here, okay? So it's still relatively weak in my opinion. If the markets fail, if Bitcoin fails, this thing is probably going to be the first one on the list that everyone is going to sell because it's nowhere near its highs. Now what people are hoping is that it plays catch up, and it's trying. So here's the thing, if you're in it, great, let it do its job, okay? Let it try. If you bought it at earlier prices, giving it a chance, and you took the chance, and now it's starting to pay, okay, there's no sell signal. So let it do its thing. You have resistance at 67 cents. Maybe it'll get there, okay? But it's probably a good idea, if you have it at low prices or lower prices, it's a good idea to unload a little, okay? Or the higher it goes, unload a little more, or whatever, see if it can push that high. But as soon as that market turns, you're probably going to see a red candle develop, kind of like this really ugly one here. But it never followed through, right? Never followed through. This could have shaken a lot of people out. So that's why it's just a good idea. Imagine, let me just bring up an example. Imagine you bought it here. Okay, what is that? 24 cents around there. Let's say you bought it at 25 cents. A couple of days go by, and you're like, wow, this thing is at 67 cents, right? It's basically tripled in like 2 days. I'm going to hold it, right? And then look what it does. So this is why it's wise to take profit. What if you took profit instead? Not the whole position. Let's say you bought, I don't know, this is about you bought $1,000 worth, okay? And now it's worth $3,000 because it's tripled. And you lock in 1,000. Like, I'm just going to lock in a third of the position. And then it gives the whole thing back. You just locked in money, right, that you would have given back. That's why you should take profits when you can, because you don't know when these pin bars are just going to show up like that. All right, so anyway, so that's how I would treat this one. There are many better charts out there compared to this one, so I'm not a big fan, and I wouldn't put any new money into this. Okay, Glenn, do you take any of your analysis from actual blockchain data? That's a good question, Glenn. No. All my analysis comes from the price chart. So I'm looking at historical price action, relating it to current price action. I'm looking at trend, and I'm looking at levels. That's it. That's all I need, okay? That's really all you need, because I operate with the premise that all market information in the world, all known information is baked into the chart. All right, price is a discounting mechanism. It's one of the reasons why technical analysis works, if you know how to use it. A lot of people get caught up with oscillators and all other stuff. That's why you don't see any oscillators on my chart, because they're backward looking, and I need to be forward looking, right? So that's a good question. But yeah, blockchain data doesn't mean anything to me. So that's a good question. Isaac, Algo, all right, is Algo a stock? Let's see, ALGO. No, maybe it's a coin. Algo, let's see, USD. Oh yeah, it's a coin. It's a coin, all right. So look at this. Jeez, how come? Why didn't anyone tell me about this one before? What the hell's going on here? Look at this. All right, so things at $1.25. So again, if you're in it, this is the same story as many of the other ones. If you're in it, you should be taking something off the table, okay, and then wait for it to develop a higher low. If you're not in it, do not chase. If it looks vertical like this, do not chase. Even as an investor, you can get better prices if you just wait, okay? These things are not going to keep going. This type of momentum is not sustainable, all right? Look back here. See the move back here? This move back like in August? You see, and it went up to a point, probably sucked a lot of people in, and then it gave it back, right? By October, gave the whole move back. These moves will do the same thing. It's a cycle. It's just we don't know when, all right? But what you don't want to be, if anything, you're buying that. The chances of that occurring from a high are much greater than at a low. So why would you buy the high, right? That's my thinking anyway. So great for the radar. I love the structure. I mean, super strong. I love that. Especially since, Bitcoin hasn't even broken out yet, and these things are so, it's an outperformer, all right? So that's what your altcoin should look like if you're in it. So that's what I would do. And if, another thing you could do is you can trail your stop if you're in it, 2 bars behind. So let's see, so the bar has to be closed. So you would start with this bar, this middle bar right here, right? But since that high is a little higher, you have to go back to this bar. The low is $1, basically $1, right? No, what's the low? I'm sorry, 84 cents. So you could trail your stop at around 84 or 85 cents, something like that, and see if this thing just keeps going. That's after locking in a portion, okay? So good question. Thank you for bringing that one up. Oh, AVAX. I haven't forgotten about AVAX. Let's see how AVAX is doing. AVAX, definitely one I want to get involved in, you know, at least as a swing trade, but not right now. So look, the unloading has begun on this one. I guess people are, you know, getting tired of the move. See that red candle? That's a bearish inside bar. Hasn't closed yet, but if it takes out the low, then you're probably going to get more of a pullback. Now let me show you all an example of an extreme version, because what we're looking at, this picture right here, and same with the other one there, algo, right? What you're looking at here is the herd mentality. That is what this is. And there's another name for it, which you may be familiar with. It's called madness of the crowd, or madness of crowds. This is nothing new. It's part of human nature. It's been around a very long time. It's what happens when emotions take over, all right, and people make irrational decisions. So when you see these, okay, you must do the opposite, okay, or at least do not get caught up in that madness, because people are going to tell you all kinds of things. Or you look up the news because I want to know what's going on, and they're going to say, oh, you're going to miss out, or you're going to watch some YouTube videos. I'm going to be a Bitcoin millionaire. I'm going to be a dot millionaire in a year. All I have to do is buy, you know, put all my money into it, right, at the top. So when you see this type of herd mentality situation, you have to step away from it. Okay, so I'm going to show you an extreme, very extreme version of it. There you go. See that? You remember this? Not too many people have been talking about this one recently, but this is the herd mentality on steroids, right? And people are making $50,000 in one day and blah, 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 blah. I wonder how many people got caught holding it, thinking, you know, because they watched the YouTube video saying, at this rate, it has to go to 2,000 because all these shorts and blah, blah, blah. Okay, what's the price today? $51. All right, so that is the madness of the crowds, the other side of it that no one likes to talk about. They're only excited about the, you know, the fun part, which is the initial part, but not this pullback. So that's why you need to step away. And when you see something going vertical like that, because this is what's next. Okay, maybe not this extreme, but that's what you need to wait for before you make any judgments. Because if the trend is going to stay strong, right, let's go back to AVAX. If the trend is going to stay strong, then it should find a higher low somewhere, and it should give you some structure and a continuation pattern. Let the market figure it out. Let everyone else figure it out, right, with their money, and they'll figure it out, and then a buying opportunity will develop. I'm watching for a swing trade, but there's nothing here at the moment. I'll call this for a swing trade. It's definitely a good price. It definitely moves. You know, it's a good mover. And hey, if I see the setup, sure, I'll send it out to members, no problem. But there's nothing there at the moment. Okay, this is where rules can really help you minimize yourself from the equation, right? That's how our swing trade strategy is based on a very specific set of rules that took me a long time to develop. And the goal, or the objective of those rules is to minimize my feelings, my opinions, whatever I think, and blah, 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 and let the market do all the work. The less involved I am, the less of a chance we second guess, and you know, and the market takes care of it, right? That's the position you need to be in. That's how you're least emotional. I may be emotional about something, but like people ask me, should we do something here? No, because if I determine my risk at the time of entry, I was willing to take that risk, either stops me out or we're going to the targets. Okay, that's it. And I leave it up to the market. It's usually a better way to go. Okay, Pepe. Okay, so these are my wave 4. That was my wave 4 challenge. Okay, let me see here. Glenn, took my finger off the keys and pressed them. I'm BTC, ETH, and need a plan to exit. So do you mean Bitcoin against Ethereum, or do you mean Bitcoin and Ethereum? So you're heavily invested. So look, Glenn, there's nothing wrong with that. Just understand, you have to look at it from a perspective of risk. Like I said, Ethereum is in a place where you should probably distribute some risk, but you don't have to unload everything. The thing is, if Ethereum goes higher, this is where people go wrong because of the greed factor, and it's part of human nature. So I understand, but you need to get rid of that. You need to minimize that. Here's what people do, and I'm not saying you specifically, but here's what people do. They get out of some, right? Let's say you get out of, let's go back to that Ethereum chart. Right, so they get out of some of Ethereum at, you know, at the current price, 1788, and then they say, oh yeah, I sold the top, and then tomorrow it's at 2000. Ah, why did I sell it? I'm so stupid. Why did I listen to that guy? He told me to sell it. I could have been up this much more money. Right, that's what everyone focuses on, but you don't focus on the risk. Okay, so again, if you're heavily invested, take something off the table so that you're not heavily invested. Maybe you're less heavily invested. But the point is, obviously you're longer term, so you want to hold on to a core position. How much you hold on to is going to be a function of your own risk tolerance. That I can't help you with. You have to figure that part out yourself. Okay, Emil, by the way, we just hit T3 on. Oh, it's about time. Let's take a look. Oh, let's see. 48.6. Oh, nice. So T3 was reached. All right, great. So the swing trade I sent out back here, what, 2 weeks ago, just went to its third target. Right, we've distributed our risk in this nice little buy signal developing here. That's what I like to do in these situations. And look, I didn't even have to do anything, right? The target was preset. The market worked for me. I didn't adjust. In fact, I'll tell you a little story. Right over here on this candle, when we got that initial pin bar, someone sent me a message saying maybe we should adjust or get out. And I said, I'm not adjusting. Because if it's not at my stop, there's nothing for me to do. Let the market work, right? Good thing we didn't get out. Now, we could have gotten back in. There were plenty of opportunities to get back in. But what if this opportunity occurred at, 3 a.m. and I'm asleep, right? And I can't send that out and blah, blah, blah. Now we all missed it. So the market did its job. Great. Nice to see. That reward risk was pretty good too. Let me see. Where is the, no, I don't have that one on here. Okay. Anyway, thanks for pointing that out. All right, Pepe. Okay, cool. So, Glenn, dollar cost averaging. I'm not sure what your question is there. Okay, I think we're on the same page. Cam, hey Cam. Okay. Let me see. Hold on. Cam's question: are these streams archived? So Cam, yeah, just on the YouTube channel. Go on the YouTube channel, and every stream that I've done is on there, so you can watch this after the fact. And I spent a little time addressing the gold situation with gold mining stocks. Okay, so Cam, let me see if you're still there. What I want to say is, it's a good idea since you're relatively new. There's no rush, right? Even though you may be uncomfortable with the inflationary situation, there's still no rush. The best thing you can do right now is develop a plan, in that whether it's a swing trade plan or an investing plan. So swing trade plan may be a little more advanced for newer traders because there's a lot of different type of details that you need to be familiar with. But an investing plan is a lot simpler, right? And that really is all about what, how you want to allocate or how you want to sector off the portions of your capital, right? That's really what you're doing. And then once you figure that out, you can say, okay, my conservative sector, I'm going to invest, out of my $10,000 investment, my conservative sector will consist of, the high quality dividend paying stocks, okay? And then my aggressive sector will consist of EV stocks, okay? And stuff like that. And that'll really keep you out of a lot of trouble. Also, another thing is often your aggressive sectors, when you get a big winner in one of those, it will often add a very large portion of profit to your account for a smaller amount of risk. Okay, so yeah, you're going to have some losing trades here and that, which, when the risk is controlled, you're not going to care because it's a small percentage of your account. But when you have a big winner, something where you risked maybe 1 or 2%, if it delivers 3 or 4% or 5% profit, that's huge for the amount of risk that you took. That's how you make your account grow. Okay, and options are a very good tool for doing stuff like that. Anyway, and we'll talk more about that, Cam, but you could check out some of my previous, my streams, and also I saw your question in the email, and I'll respond to that as well. All right, so let's see, Glenn, okay, cool. All right, so I'm just getting to your questions here. Yeah, I saw Dot. That was another swing trade that I had sent out, Dot. This thing's been doing well. Let me see. Do I have the hold on. Let me see. Let me just go to the swing trade. I think it's on Binance. Is that where I have this order? Hold on. Let me find it. I want you to see the orders. So is it .USDT? Let's see. Is it that one? No. Hold on. I'm going to find it here. Just give me a second. Maybe it's on Bitfinex. Yeah, there it is. So see this? See that? This is what we send out to our members, right? I sent this one out like 3 weeks ago, or I may have sent it after the Bitcoin trade. I don't remember exactly. But the risk was low, 1%. The buy stop was at 18.25. By the way, this thing pulled back first after it tapped everyone in, right? So the stop was at 14. This thing went to 15 after it got us in. So today's close now is 24.5, and we reached our first target, right? 23.5. So we still have 2 more targets. The risk, look at the risk reward. This is a very important number, okay? So we're risking for every one that we're risking, for every $1 that we're risking, we're looking to make $2.40. So when I'm right, I win twice, almost, 2.5 times what I'm willing to lose. That's a positive expectancy. That's how you make money over time. It's very important that this number is over 1, at least, at minimum 1, okay? So anyway, so this thing's doing well. The point is it's following the rest of the market, and that's why I called it, okay? And I liked it, and I don't usually call these type of trades in these coins because a lot of them are garbage, but when I see a nice one like DOT, I was liking it. I was liking the previous structure. I called it, and that's the same going to go for AVAX, and that's the same going to go for Algo and even eGold and a couple of other ones that have great structures right now. I want to see how they behave on the pullback. Okay, so let's see. Moving staked and getting a week. Oh, nice. Okay, cool. So yeah, so Glenn, again, same situation. Now this is a swing trade I'm showing you. This is not even inventory. This is a swing trade. So, I mean, if you're trading it that way, these are the targets. All right. Again, I sent that out weeks ago to our members. So you get a little preview of it here. That went by text and by email, by the way. Okay, so let's see. Okay. Oh, that makes sense. That makes sense, Glenn. So they're being pumped. Right, you're going to have a lot of these YouTube people, these big name YouTube people, and I'm sure they're in it, right? And they're pumping it so that they can unload on all of their fans. That's the nature of it. And guess what? There's no oversight. The CFTC, the SEC, the NFA, none of those regulatory organizations can say a word because these are not commodities. These are not derivatives. They're coins, right? They have no oversight. So just something to keep in mind. So if you're in these, realize that and do the same thing that the pumpers are doing. What are the pumpers doing? They're in from a low price. They're getting everyone excited. Yeah, these things are going to go up forever and blah, blah, blah. And they're unloading on them. They're not buying now. Okay, so just keep that in mind. It's like a big, pyramid scheme. So let's see. But it was 6 months ago, and thanks for. Okay, no problem, no problem. So Gabriel, when you see crazy herd mentality charts, when is a good time to short? Okay, that's a very good question, Gabriel. Let's go to a herd mentality chart. Let's go back to let's see, EGLD, right? Because someone brought this one up the other day. eGold. Oh, this one's pulling back. All right, so this is a good example. Because again, this is what the rest of them, they're all going to do this, by the way, okay? All of your favorite coins that are vertical right now, the selling will come. Nothing is immune from the selling cycle. Now, as far as shorting these, when something is very strong like that, shorting is a bad idea. These are not bearish. The broader structure, and here's why I say that, the broader structure is very bullish, and you're going to have a lot of people waiting to pile into these things. So you're really going against a lot. Now, unless you're a day trader, it's a different story, but I'm not going to talk about day trading here. Swing trading, really, really bad idea, high risk thing to do. And position trading or inventory doesn't make any sense at all, right? You don't want to average into something going the wrong way. So I would not short these. Something to keep in mind. You can make money by playing one side of the market. You don't have to short. Now, like for the stocks, for example, we don't call short stocks. What we do is when we want to short something, we go to the options market, or we'll use an index. Like, we have we have that UVXY. Even though it's a long call, we're playing the short side of the market, right? It's a lot more controlled. You don't have to worry about gap risk, and all that other kind of stuff. So that's what I would say about shorting these things. Don't do it. It's a very, very hard game to play. And if you're not on a day trade time frame, all you're going to do is get into trouble. Okay, you know how many people, I remember, let's go back to Bitcoin for a moment. You know how many people, let's go back to the days when people thought Bitcoin was junk and garbage, right? Except for us, because we were calling it long the whole time. Now back here, let me show you something. I remember very specifically, back here when Bitcoin looked like this, okay, and it went to 3,000, on TradingView, I used to, because I always share my analysis on there, I was saying we're buying more, we're buying more, we're buying, right? And I used to get criticism. And I used to say, we have a long-only strategy. And people used to send me messages. Why would you be long-only? There's so much money to be made on the short side. You're missing out on all that shorting opportunity. Really? I don't know. Short side, huh? Good thing we weren't shorting it, because all it kept doing is going higher and higher and higher and higher and higher to, you know, obviously you know the story, right? Shorting, 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 shorting. Oh, some people may have shorted here. Uh-oh, it's going higher. Uh-oh, margined out. Okay, so no reason to short these things, okay? Again, day trade is a different story, but I'm not going to talk about day trading these things. If I'm going to day trade anything, stocks, right, or futures, not these things. All right, anyway, so great question. Let me see how I'm doing, because I'm starting to rant. All right, not too bad. I want to make sure I get to everyone's questions. So, okay, so that was, hold on, where am I? That was Gabriel's question. Got you. All right. So, and anyway, as far as analyzing a short, you want to see very specific structures like a double top or something like that, and you want to see support being broken of some kind, and it needs to be relative to the time frame that you're trading. Don't mix time frames. Don't say, oh, but there was a support broken on a 30-minute chart. It means it's a short on the as a swing trade. No, it's not. Okay, the support needs to be broken on a daily chart if you're doing that type of thing. So again, when it comes to shorts, I would stick to markets that can pay, that aren't as risky, because again, stocks can have gap risk, where something like the NSX USD, here, let's take a look at that real quick, the Nasdaq 100, right? This thing, you can short something like this. Yeah, it's very risky and this and that because of the trend, but this thing is probably not going to gap 20 or 30 points or even 5 points, because that would be it's very difficult for something like this to do that, number one. Number two, when it does pull back, you know, you can make like a decent, even if it doesn't pull back a lot, you can still get away with something there, right? Because these things are affected by, you know, an entire group of stocks. All right, anyway, so that's that question. I'm talking about it too long here. All right, let me move on to the next question. So Glenn, no problem. Hey, no, questions are good. I'm getting coached now as I am learning, and your methods are very, okay, cool. You're getting coached, okay, from another coach. The dot is all from profit for me, and okay, which adds another 12%, going to be a big change from investment to swing. All right, so well, Glenn, here's the thing. There's no need, you don't have to do one or the other. Okay, we at GreenBridge, we operate both, right? We have our portfolios where we're doing our long-term inventory stuff, and then we have our more aggressive swing trade strategy, and we keep the money separate. Everything is separate. So just think of it as a different strategy. There's nothing wrong with inventory. It's a great way to make money, and it's a lot easier. It's definitely more appropriate for beginners, because you don't have to be tied to every little thing that goes on in the market. You don't have to be all wrapped up in charts and oscillators and all this other nonsense that's not going to help you anyway. You really, all you need to do is see some very basic things, okay? And of course, fundamentals can help on the really long term. It's a good idea for you to believe in the project if you're, you know, investing in these coins and stuff like that, at least. And if you're wrong, you know, that's where you have to manage the risk. So really, inventory is really about more of anything else. It's more about managing risk effectively or responsibly. Okay, so good question. BTC pulling back after hitting target 3. Benefit of placing predefined targets. Right. Well, so predefined targets, they work. I like them no matter what. You know how many times? Let me show you an example of some predefined targets. Look at Jumia. Okay, see Jumia? Look at this trade. I called this trade a while back. Okay, our target 3 was at 13.50. This thing went to 61 blah blah blah, or $65. It was a little early exit, right? Would you say it was a little early? We bought this thing at 8.50. So yeah, we missed it along the way. There were other buy signals along the way, but you know, we have so many other things going on. Sometimes we miss these things. The point is, you know, our objective, it's not our objective to maximize, to get the top, because that's just gambling. Our goal, we only have one, when it comes to the swing trade strategy, there's only one objective, and that is to produce a positive expectancy. I don't care if Jumia goes to 300. Okay, I'll just look for another buying opportunity to get involved, but I'm only interested in generating a profit or a return that is greater than the risk that I took. That's it. Because everything else, anything else beyond that is all emotional, right? It's like, I'm the top. Oh, I got shaken out. Oh, la, 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 right? All that nonsense. There's no room for that. Okay, if you want to be a profitable trader, there's no room for that. You really need to separate yourself. Now, that's not easy to do. It's human nature to have feelings, especially when it comes to money. But you have to recognize it for what it is and stick to that objective. You want to make more than you risk. Okay? Doesn't matter where the markets go. Markets are highly random. They're not always random, but they're highly random. I love these people who come out with these predictions. Oh, you know, Bitcoin is going to go to 50K and then it's going to turn around and then it's going to go to 3K. Right. Thanks a lot. Thanks for giving me your opinion and now screwing up my you know, my thought process. No. That's all nonsense. No one knows where these things are going to go. I don't care how much analysis you do. You have to be able to adjust to new information as the market provides it, right? So you have to have a very open mind and be very flexible. A lot of that stuff I learned from the CMT designation that I have. I really learned a lot about the behavioral aspect of the market, and that's really where the key is. Not all this, people think it's math and facts. It's not. It's sentiment. Okay, so any kind of tool that will give me a gauge on sentiment is really where I look for value, not from an oscillator. Okay, so I think I answered everyone's questions, and I'm only an hour into it. Wow, not bad. See, it's my new fast format, right? My abbreviated format, because I'm cutting, not wasting time on frivolous things like promotion. So anyway, any other questions? Have I answered all of your questions? Anything else you'd like me to go over real quick before I wrap this up? Look at CGC, okay? Canopy Growth. So this thing has been going crazy recently, right? Again, another lesson of the herd mentality. Look, oh, CGC, oh, this thing, oh, pot stocks, oh, they're the new Bitcoin again, blah, blah, blah. Well, look today, this thing gave back 22%, okay, in one day. We had some warning with that doji situation yesterday, took out the low, and here we are. What if you got caught in the hype? Because what do people, you know, I pick on Robinhood traders, but it's not the trader that I'm real, it's not the Robinhood platform I'm picking on. It's really the type of trader, because people on Robinhood, what do? They react to news, right? And they are the herd. So Robinhood, you know, you go on your Robinhood thing and, oh, wow, CGC is up, you know, blah, blah. I love pot, you know, pot stocks. Yeah, right. I'm familiar with pot. I know how that works. Everyone smokes pot. I'm going to buy some. Right, great. You bought the high. Nice job. Okay, and now it's 22% lower. So, yeah. So Glenn, now hopefully you got out of some. You took some profits on this thing. But this is my point is, this is what happens when you get caught in hype. Now, after this move today, right, this is a much more attractive place. So for people that missed their initial move there, hey, no problem. Now you wait for stability. Okay, this thing will find support. If the stock is, Canopy Growth is the leader in that sector anyway. So if there's going to be any quality cannabis, it's going to be this one. So there's going to be support, probably around, what, the mid-30s somewhere. But this candle, right, a common mistake that people make when they see a candle like this is, oh, it's a cheaper price. I'm going to buy some. It's on sale. But the momentum is still negative, right? There's nothing that says this is a good time to buy just yet, even though the location is more attractive. So what do? As a swing trader, I wait for first, right? I identify the trend. We got that. I identify a level. Okay, we're close to one, but we're missing one thing. In fact, let me ask you guys and girls, what's the one thing I'm missing? I'm going to state that again so that you can answer the question. So as a swing trader, right? I'm looking at three things: trend, right? Location, and we have two of those things in place. But before I can buy, I need one more thing. Who can tell me what that is? Who can tell me what that one more thing is? I've mentioned it in many streams. I've mentioned it in the chat room. I need one more thing before I can define my risk and take a reasonable risk. Who can tell me? I know there's a little delay, so I'm going to wait until you guys start typing it in, and then we'll wrap this up at that point. Okay. So anyway, that's CGC, and the rest of the sector, they all got hammered. Okay, they all got hammered, and I don't even know what the news is. I don't need to know what it is. I'm only interested in levels. So let's see what people are saying here. Okay. Yeah, Glenn, I'm not sure what that is. Not sure what that is there. Those are your prices? 315. Oh, wow. Oh, you got it you got it cheap. Okay, oh, wow. Hopefully you took some money off the table along the way there. But who can answer my question though? So I guess no one knows. You could say I don't know. Yeah, yeah, Glenn. When it's, I mean, in this situation, look, you have it from a good price. So if you're an investor, it's a little different. I mean, but what I'm saying is, as an investor, when you see it going vertical like this, and you see, even if you don't see a red candle, it's just never a bad idea to take something off the table. Not the whole thing, just something. Okay, that's all. So you're saying, wait, number of shares? You have three. I'm not sure. I'm trying to read that number. It's hard for me to read. So all right. So all right. We have a couple of answers here. So Isaac says higher low bar structure. So Isaac, you're close, but I see people don't know what the answer is. I'm looking for a setup. Okay, a setup. So I have trend. I have location. I need a setup, right? So Shobendu, you're close, right? Confirmation comes after the setup. So that's what I'm lacking that right now. All right. So the mistake that people make is they say, oh, it's a good price, I'm going to buy it. Okay, it is a good price. That is true. And it is a good location, but there's no setup, which means the momentum is still negative and it may go lower. Okay, it's possible at this point it could go lower, but I don't know. The market needs to tell me. I don't have any opinions. I can evaluate levels and say, okay, I anticipate a type of behavior at the level. Okay, but the market then needs to prove it. So I don't have that yet. Now, will I send out a swing trade on CGC if I see the setup and confirmation? Yeah, sure. Because it's been acting strong. It's a much better regulatory environment now. Definitely. I like the general structure. Okay. But that's after it stabilizes, after I get my confirmation. So that's the one I want to point out. I mean, that's the swing trade mentality. It's very short-term oriented, and it has a very specific set of rules. I'm not just doing things on feeling. Feeling and intuition and conventional wisdom are your worst enemy in this business. Okay. All right. So Gabriel, for those that have not gotten in at the bottoms but have invested in a position, then find themselves at 35%. When is the right time to take profit? Okay, so Gabriel, that's a good question. All right, let's go back to Bitcoin. Let's go back to Bitcoin since it's still fooling around at its highs. So there is no perfect time. All right. So what you want to do is when a good time is when, for one, you have to look at the sentiment, and you can judge that by candle formations. When you see something go vertical, something very strong like this situation right here, that's a good time to get out of some. You want to average out. The point is you want to average out. You don't want to, people think in terms of all in, all out, right? They want to buy it all at the same time and they want to sell it all at the same time. Not good for an investor, okay? As a short-term trader, yeah, but bigger picture position trades, no. You want to average in and average out. So when things go vertical, you sell some. That's why I always tell people when I look at a chart and it's vertical, I hope you sold some. Lock in some while you can. So you're not going to get the top. Right, by averaging out, though, you're going to get a higher price generally. So you hold on to some. What if Bitcoin goes to 50K? You sell some more. What if Bitcoin goes to 55K? You sell some more. What if Bitcoin goes to 50K and then pulls back to 43K? Well, you've sold some, and if it gives you a hard time, perhaps you lock in a little bit more there. Again, you're averaging. Okay, you're not doing in absolutes. All right, so that was a good question. I'm going to leave you with that because now I'm starting to overdo it with the talk, and I'm trying to stay on schedule here. So great question. Right. So a lot of this has to do with sentiment. You know, over at GreenBridge, we talk. I mean, that my whole philosophy is sentiment based. Okay, and that's why my charts are so simple. I don't use oscillators and all that other stuff because they don't help me. Sentiment allows me to look ahead, not behind. Oscillators are basically a formula that looks at some kind of average price over some period of time, which means you're looking in the rearview mirror. Great when you're in a trend, but what happens when the trend stops and you go into a consolidation? Now the oscillator is going to throw you off. And a lot of people, many people have been doing this for a little while, will experience that. Okay, that's because you have to look at it from a sentiment point of view, and it's not easy because there's really no, there's some sentiment tools, but they're not. It's more of an art, really. You know, that art and science thing. If this was all science and no art, then you'd have engineers basically take all the money out of the market, and there'd be no market, or no one would make any money. The art portion of it is the emotional portion, and that's where opportunity comes from. But you need to understand how it works and how to capitalize it and separate yourself from it, because we all start out as part of it. Okay, we all start out in the herd because we don't know any better. That is human nature. So you need to separate yourself from it, and that takes some time. Okay, so, okay, cool. So now, so Isaac, yeah, inside bar is one type of formation, but I'd like to actually see double bottom, right? To answer your question there, with that chart we were looking at on CGC, I'd prefer to see a double bottom. At least gives me a sense of stability after such a vertical bearish candle. You know, such a negative momentum type of candle. All right, so I'm going to leave you guys with that. Again, thank you for your great questions and all your participation. If you haven't liked the video, please press the like button if you like it, so it gives me some good feedback. And also make sure you register for the channel here, so every time that I stream one of these or we stream Talking Markets, you'll get an email notification from YouTube as well. Okay, so thank you all again. If you'd like to know more about GreenBridge, there's a bunch of information in the description portion of this video. You can just click on the show more portion at the bottom, and you can read about, you know, what we do, and all the links are there and everything else. Okay, so hey, no problem, Glenn. Again, thank you all for your participation, and I will see you next time. All right, and hope to see some of you guys in the chat room. By the way, we do have a free chat room, and Gabriel, I answered your question in there. Sometimes we don't get to answer them right away because we have the other, you know, the active investor chat room that we're constantly have to attend. But if you have a question and you'd like us to answer it, come to our free chat room. Just register at GreenBridge, come to the free chat room, ask the question, and we'll be happy to answer it. All right, so hey, no problem, everyone. Enjoy the rest of your day and your Valentine's Day and all that stuff if you celebrate that, and I will see you next time. Thanks for watching.